Today, in an extremely dangerous and high-risk maneuver, the Tesla stock analyst said Tesla stock may have bottomed.
Musk on the Tesla earnings call last night, warning shareholders about a potential rough patch ahead. Shares getting hit this morning, down better than 8%.
And in today's episode of Thank You, Captain Obvious, this is not new information. Tesla's beginning to ramp their Robotaxi fleet. That's not free. It's going to print crazy money in coming years, but right now, that's going to be a drag. They don't yet have high volume production of the new, more affordable vehicles, plural, and until they do, that's also going to be a drag. Interest rates remain sky high, so affordability is the limiting factor. And they're also continuing to aggressively invest in the future, spending, give or take, $9+ billion, as advised on the earnings call yesterday, for the full year. So while Tesla's between growth waves, and while the Robotaxis are beginning to scale, not at massive scale, obvious things are obvious, thank you. So if it's likely, maybe, as Carl's suggesting, that Tesla stock down 8+% because Elon said expect a few rough quarters, it's not new information. Elon saying it out loud this quarter, maybe it triggered a few people to dump the stock, but I mean, you could have figured that one out, right? There's no magic instantly be at volume production of new, more affordable vehicles model. No magic instantly have a fleet of robotaxis everywhere simultaneously printing crazy money. And there's no instantly already have all the AI training compute you need, therefore no required capex.
Let's bring in Canaccord Genuity's George Gianrikas, raises his target from 303 up to 333, and he maintains his buy. George, it's great to have you. You write it pretty plainly. We may have just seen the bottom in growth trends with positive acceleration on the way. What makes you think so?
Well, the good thing about bad comps is that they become easier over time. And so if you think...
I'll fact check myself. I hadn't watched this video, but I'd read the title and erroneously assumed he was talking about Tesla stock, which was a bold call instead. It appears he was talking about vehicle deliveries. The title of the video, the quote from him, "We may have seen the bottom for Tesla." It turns out in this instance, it seems like he was talking about vehicle production. Much less dangerous prediction.
Think about the next several quarters from Tesla. Yes, we agree they'll probably be rough, but they have been rough. I mean, the company had its worst year-over-year decline in the second quarter. So when you look to Q3, Q4, these EV tax credits will come off by the end of the third quarter. We could see a rush in the third quarter from U.S. buyers. And then when you look to Q4...
Probably likely. Tesla did on the earnings call point out that they're going to prioritize delivering as many of their existing vehicles as they can to consumers, e.g. the current Model Y, the current Model 3, blah, 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 so consumers can take advantage of that. It's hard to predict how much of a factor this will be, but presumably there will be some consumers out there who were thinking about buying a Tesla who are like, oh, hang on, do I want the tax credit or not? I do? Oh, well, I better hurry the fuck up and buy it now. That end of EV tax credit rush, by the way, is likely to temporarily, slightly postpone mass production ramping of the new, more affordable vehicles, plural, likely into Q4 and then 2026, but we'll see.
For Q1, they have promised one or maybe a couple new vehicles, which should help those comps. So when just purely looking at the math, Q2 may have been the bottom in terms of year-over-year declines.
Right. Everyone always says, oh, the auto business is a small part of the valuation, but you seem to still care about it.
Yeah, I mean, it's really important. It's the vast majority of their business. And look, we love robots, we love autonomy and robotaxis, but those are the end of the decade sort of revenue drivers. And particularly on a robotaxi, our concern is that the cost per mile that they articulated in the call is way too low. We did a lot of math around it, and we can't see them really breaking meaningfully below $1 per mile. And what that does is...
Now, this is curious. I'm no physicist, nor am I a mathematician, but I have, many years ago, done my best to estimate Tesla's cost per mile as a baseline cost to operate highly efficient, autonomous, electric robotaxis in the future. Energy costs, repairs, maintenance, the whole thing. I've actually attempted to do this. You can see some of these assumptions in my Tesla valuation model. If you don't have access, you can join Patreon with the link at the pinned comment. Do so at the investor level and above to have a peek. But $1 per mile seems outrageously high to me. Maybe he's only referring about a short window, like a few years into the future maybe. But over the long term, it seems quite likely that Tesla's going to get somewhere close to their target of 25 cents to 30 cents per mile in terms of a cost. There's minimal maintenance, and then your only real major cost is energy. Now, to be clear, I don't think Tesla's going to be charging $1 per mile for some time on their robotaxis. Eventually, they will get there and then beyond, as in lower. But I'll be very curious to know the time frame that Canaccord have actually modeled this out and how they came to these numbers. Like, I don't really understand what are their assumptions. If anyone's got access to the valuation model, I'd love a peek.
It limits their TAM in the United States to about 24 billion miles. For them to get to trillions of miles of a TAM in the US, they have to break to 25 cents. And We did a lot of math around it, Carl, and we just don't see it happening for a very, very long time.
I spoke too soon. They do see it happening, apparently. Tacit in that statement is that they do see it happening, just not for a very, very, very long time. So fair's fair. Again, if you want to see my cost per mile assumptions, check out my Tesla valuation model on Patreon at the investor level and above. By the way, the good news is, initially, Tesla doesn't need to be offering this service for 25, 30 cents, 50 cents, 69 cents per mile. They simply need to have a comparable and or superior service to an Uber, a taxi, a Lyft, and I'd argue definitely comparable to an autonomous vehicle, but superior to a human-driven vehicle. Anyone with a strong sense of smell might understand what I'm getting at. Have a think. Most people, unless they're extremely extroverted, probably, all other things being equal, would probably prefer the vehicle without the driver in it. Complete privacy, no undesirable aromas wafting around the cabin, nobody making a call to a relative overseas for the entire journey, no dude creeping on a young, hot, and highly intoxicated female passenger heading home, etc. So initially, all Tesla needs to do is have a comparable and or slightly better service for a comparable and or slightly better price, and they'll eat the lunch of Uber, Waymo, Lyft, blah, blah, blah. But they'll already initially begin to offer the service at a much lower cost, because again, they do not have to pay a driver. So Tesla doesn't need to be at 25, 30 cents per mile initially to absolutely crush it. However, over the ultra long term, if they can get to this kind of a price point, they will be doing just stupid miles per year across the world.
Right. So why do you have a buy on the stock?
Well, because first and foremost, we see these comps, bottoming in the second quarter. And beyond that, if you look to 2028, 2029, 2030, there's a lot of earnings power. So, we get...
So I've got to take a moment here to appreciate and give credit where it's due. Bro just talked about a time horizon as long as close to 5 years, let's call it roughly half a decade into the future, which is remarkable given the extremely short-term nature of many analysts and especially the entire finance media. I'd love to hear more about a 10-year window, but hey, 5 years is pretty uncommon to hear from an analyst. We're usually hearing about next quarter or next year at most, maybe 2 years into the future.
Get to over $10 in 28 and 29 and 2030. And if you think about the chessboard over the next several years, if you believe in autonomy, if you believe in robotics, it's very hard to find a company that's going to lead in both, not to mention energy storage. And if you listen to the call yesterday, and we're a big believer, we need a lot more batteries on the grid, a lot more batteries, because what the big, beautiful bill did was it created a void in terms of the energy we need on our grid between...
So just jumping in here, does anyone happen to know any companies that are likely to lead in autonomy and robotics and energy storage? Because as George was pointing out here, it is very hard to find such a company. But boy, if anybody knows of such a company, I'd love to maybe buy one or two of their shares if I could afford to. I mean, that'd be fingers in some very important, very large future pies. Anyone know any companies that match that description?
Now and when gas turbines and nuclear power can help.
But with automotive declining, or at least challenged, I mean, what signposts are you going to look for to say, okay, they're meeting them and robotics and robotaxis is going to be a success over these next few years? Because we're talking about a gap here of years potentially till they get to scale.
Yeah, I mean, look, from a Robotaxi perspective, they've been successful so far in Austin. And on the call yesterday, they said that they'd be able to meet about half the country's demand by the end of the year. We'll see if that's doable. Even if they get to something close to that, it's a remarkable feat from the company. So,
if Tesla got there in 5 years, it would be remarkable. Now, I just have to take a moment here. It's the biggest head scratcher of head scratchers. Watching the folks on CNBS just low-key, casually hearing that like Tesla's operating robotaxis in Austin, there's been no major incidents. Again, as soon as there's a single crash, collision, etc., with a Tesla autonomous vehicle in Austin, it's going to be front page news for a week running. There's been none. Yet the response from mainstream finance media and a lot of analysts, to be fair too, it's tumbleweeds. They're like, well, who cares? I mean, it's just a little tiny geofence in Austin that's already massively expanded less than 3 weeks after it launched at an arbitrarily dick-shaped geofence expansion just because they could. Do they not understand the implications? Remember the narrative, they need LiDAR. It'll never work without LiDAR. Vision only won't work. Waymo's ahead. Waymo's scaling faster. Tesla can't catch up. Tesla needs to partner with Uber to launch their ride-hail app, etc. Like what Tesla's done is absolutely monumental. Almost a decade in the making. And it's so obvious that they're going to scale widely, rapidly, and take the lion's share of the profits in autonomy, especially in the US, Europe if they ever get regulatory approval, and other major markets where they will be able to charge quite a premium versus, say, the third world developing nations, China, etc., where Labor costs are lower, so there's less margin robotaxis in the first place. But where was the CNBS title, "Holy shit, they actually fucking did it. Vision only robotaxi launch in Austin." Followed up by the, "Holy shit, they just expanded their geofence less than 3 weeks after launching in Austin. Holy," where was it? I posted this very small screenshot from Tesla's earnings report yesterday with the caption, "Read this again and again." The included text was, "Launched our robotaxi service in Austin and delivered first customer vehicle fully autonomously." The reason I highlighted this, we already knew it had happened, but now it's in an earnings report. This is the point where surely people can't ignore this. Tesla launched their robotaxi service in Austin in Q2. This is a monumental moment for the company and their future, proving the skeptics wrong, the doubters wrong, and opening up an enormous multi-trillion-dollar opportunity. Of course, I'm feigning puzzlement and surprise at the lack of reaction in the finance media and from most analysts, because I've called this for a long time, right? Remember I said years ago, these analysts, the finance media, will literally need to be turkey slapped across the face with numbers first before they even consider putting them in a spreadsheet and really thinking about the implications. So we're probably still a few quarters away from that or more. But to sum it up, for years the narrative was that'll never happen, and now it's like, so what?
We see that as a tailwind over the next several years. And from a robotics perspective, we weren't there, but on the call yesterday, they mentioned that someone from a very large bank went and visited their line. There's a huge potential there. They talked about legions of robots, over the next couple of years. And they said on the call yesterday, it's not our model, but they wouldn't be surprised if they build 100,000 a month by 2030.
So here's the thing. The date, the exact timing, how long it takes to get to this target production rate, irrelevant. The question is, will Tesla get there? And the answer is obviously yes. I mean, they're already producing a couple of million vehicles per year. The limiting factor there isn't their ability to produce more vehicles, it's their ability to sell vehicles to customers who currently can't afford to pay too much for a vehicle. Hence, more affordable vehicles, much larger market, more vehicles sold. With a humanoid robot, the amount of value that a useful, dexterous, and increasingly intelligent humanoid can perform, both in business, commercial settings, and even at home, housekeeper, nanny, dog walker, gardener, landscaper, cleaner, cook, blah, blah, blah. The payback time on these things, especially in commercial use initially, will be so outrageous that there's going to be quasi-infinite demand. It's not the same as a vehicle selling to consumers today, which, by the way, in the future, when Tesla's vehicles can operate just about anywhere on Earth autonomously and consumers can add them to the robotaxi fleet, they'll then be able to pay for themselves almost instantly as well. But today, that's not true, and not everybody can afford to drop $40,000+ US on a new vehicle. The point is, Tesla will get to these numbers, so hypothetically, what would that look like? Let's just say 100,000 humanoid robots per month. We're going to round it down to just 1 million per year. If these robots are being sold to consumers for $25,000 US, that's $25 billion of revenue just for the hardware. But I strongly believe, in fact, I'm adamant, Tesla's going to be charging per month for software to operate the robots. Now, why would I come to this conclusion? Let's see here. Any information pertaining to Tesla today where they have a per month subscription for software to enable highly intelligent capabilities of any of their robots on wheels? Yes, it's called FSD subscription, $99 a month, which when Tesla vehicles can legally operate autonomously just about anywhere is going to be an absolute bargain and probably going to go up quite a lot. So what if everyone who buys one of these humanoid robots, which themselves the hardware is going to bring in $25 billion at that $25,000 hypothetical purchase price? Forget the hardware revenue, forget it, throw it in the bin, who cares? What about the monthly recurring software revenue, and what does that look like per year on just 1 million humanoid robots? The numbers are actually very easy. 1 million times $99 a month, it's about $100 million per month of extremely high margin revenue. Per year, roughly 1.2 billion. Of course, in the traditional finance world, the way you would value a company, or at least this business line, which has extremely high margin recurring revenue, indefinite recurring revenue, is with a very healthy multiple. But as it stands today, many traditional finance and investor type folks are still waiting calmly until they are turkey slapped across the face with more proof, more evidence, and more numbers so they can stick it in their spreadsheets later rather than now. And I understand this. Most folks, especially analysts, tend to prefer to be wrong because they missed an opportunity than wrong because they overestimated an opportunity or they were too early. I'd rather be early than late. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.